Well, there's no doubt there's been a huge, great squeeze. I mean, I think it was last week we heard that a number of ETFs, silver ETFs in India, suspended share creation because they couldn't source the silver. And I think on that basis, I mean, really what we see is that silver is too cheap for these deteriorating monetary conditions. That is that is absolutely clear. It is therefore going higher. But the question is, you have to ask yourself, I mean, as the price rises, what are people going to do? Are they going to just take profits? Or are they going to say, I'm going to hang on to my silver because things are not looking so good for the fiat currencies, for the dollar, whatever. Gold is going up. Gold-silver ratio currently 84, should be below that. Why should I sell my silver?
There's a major silver squeeze, with some Indian silver ETFs halting new share creation. According to recent news, several Indian silver ETFs have temporarily suspended new subscriptions because of physical silver scarcity and steep premiums on the metal. In India, the silver market is experiencing a perfect storm of high consumer or retail demand, industrial demand, and constrained global supply. This has pushed spot silver prices in India to record levels and created physical shortages. Global lease rates and physical delivery constraints in the silver market are showing signs of serious stress. As prices climb, investors may choose to hold their silver instead of selling, since confidence in fiat currencies is falling and the gold-silver ratio remains high around 84, suggesting silver still has room to outperform. The speaker, Alasdair Macleod, a British economist, precious metals analyst, explains that investing in mining stocks can be a leveraged play on rising gold and silver prices. Still, he stresses that physical metals should remain the core holding since they carry no counterparty risk. Alasdair also notes a severe silver squeeze, seen in soaring lease rates and spot prices above futures, backwardation, reflecting real shortages. On silver specifically, commentary highlights a significant structural supply deficit. One piece estimates a shortfall of 118 million ounces in 2025. It's also reported that silver lease rates and physical market stress, backwardation, are increasing. With ETFs struggling to source silver and monetary conditions deteriorating, silver remains undervalued and likely to rise further, possibly even seeing stronger demand as prices climb. The markets are always shifting. Don't fall behind. To keep ahead of the curve, subscribe and like this video. Please leave your comments in the space provided below. We would be very grateful to hear from you.
Well, yes, I would think it is. Now, in terms of timing, that's up to the individuals. But basically, mines are a leveraged bet on the commodities that they produce. And if you see the value of gold expressed in fiat currencies rising, so long as energy prices don't rise more quickly, that's going to be good for mines. I mean, you've got to look at the input cost side as well. And also bear in mind that most producing mines, they will be managed through this. So what that means is that they will extract lower grades while they are profitable, rather than the higher grades. So the idea that you can translate immediately a higher gold price into higher profits, I think you've got to temper it a little bit and just understand the reality of it. The other thing I would say is that gold is hardly owned. It's less than 0.5% of all portfolios, if you like. Mines, on the other hand, I think are a bit more owned. And what I'm looking at is this is a credit bubble. Obviously, if you've got a debt bubble, which we have, the other side of that is credit. And more importantly, this credit has been applied to inflating financial assets, particularly stocks. Now, all credit bubbles come to an end. They pop, and when they burst, they usually burst quite spectacularly. 1929, October. 1987, October. October doesn't seem to be a very good month. I'm not saying that this October is going to be the crash, because, we'll look back on it and see whether that's true or not. But when the bubble implodes, basically what people do is they will sell anything where they've got a profit in order to cover the things where they've got a loss. So that's the only caveat I would really have, I think, on investing in mines. But other than that, it's you can regard it, if you know what you're doing, as a leveraged bet on the underlying commodity. In the case of gold mines, it could be a way of you catching up if you want to speculate a bit as to, the route to do it. But your core holding always must be the metal, because that is the one thing where there is no counterparty risk. Well, there's no doubt there's been a huge great squeeze. I mean, you can see this in lease rates, and basically, someone who's got an obligation to deliver physical metal tomorrow, and if he hasn't got it, he's got to go and lease it from somewhere. The lease rates have shot up. I mean, typically they were sort of up to 30, 40%. And there's some reports of them going up to 100% and more, basically saying, there's no more left to lease. The other thing, of course, is that we see a backwardation, which by definition is when the spot price is above the futures price. And people got very excited with that being over $3 at one stage, which, of course, would prompt arbitrage. I mean, people with silver sitting in COMEX warehouses would think, okay, we'll ship some of that over and make on the arbitrage. So there've been lots of stories about that. Now, how true they are or whatever, I honestly don't know. I'm sure there's a bit of it, but it's probably exaggerated. What I would say is that the backwardation of spot over futures has actually declined now to around about $1. So it's come way, way down. It still indicates that there is a shortage. In other words, a squeeze on those who are short. Because the problem is that the vast majority of the silver in the LBMA vaults is ETF silver. And the other thing which puts additional pressure on the system is, of course, people look at silver, they see silver going up, they probably think they've missed gold, and therefore the silver is a cheap way in. So they run out and buy ETFs. ETFs have to source the metal. And I think it was last week we heard that a number of ETFs, silver ETFs in India, suspended share creation because they couldn't source the silver. And I think on that basis, I mean, really what we see is that silver is too cheap for these deteriorating monetary conditions. That is absolutely clear. It is therefore going higher. But the question is, you have to ask yourself, I mean, as the price rises, what are people going to do? Are they going to just take profits? Or are they going to say, I'm going to hang on to my silver because things are not looking so good for the fiat currencies, for the dollar, whatever. Gold is going up. Gold-silver ratio currently 84, should be below that. Why should I sell my silver? So I think it's a situation which actually, particularly through the growth of ETFs, a rising price could lead to further demand and less supply, because the supply always has been from weak holders in the paper markets. So I think, Jesse, this is a fascinating situation. It's what they call a Giffen good, something which reverses the normal supply and demand relationships on price.
Alasdair advises long-term gold and silver holders, stackers, to ignore short-term price swings, as trading against big market players can be risky. He emphasizes that gold and silver are real money, assets without counterparty risk, unlike fiat currencies, whose value has steadily declined since the US left the gold standard in 1971. Let's get into the details of the interview for further insight.
I mean, I think stackers, forget trading. If you want to trade this market, you'll get killed. It's as simple as that. Because they're far cleverer people than you with big, deep pockets who will push things around. And, if they reckon you're in there, they'll kill you. So really, I think you've got to take, if you like, a more sensible view as to actually why it is that you own gold or silver. And the only justification for that, because they are at a premium price, is because they are money. They are legal money. They are final settlement without counterparty, counterparty, as opposed to credit, which is what a fiat currency is. And if you reckon that the situation for fiat currencies is deteriorating, then that's the reason to hold on to gold. And, whether it sort of goes up 5%, falls 5%, is completely immaterial. The thing to bear in mind is that the value of gold is relatively constant over long periods of time. It is the value of fiat currency which alters, and that has been declining very significantly, particularly since 1971, when the Bretton Woods Agreement was abandoned. So in dollar terms, you had $35, that was the official rate, $35 to the ounce, and we're now looking at nearly 4,150. That tells you basically that a 1971 dollar, or rather the dollar today, is less than 1% in its value of the 1971 dollar. And that's what you've got to keep bearing in mind. It's not a situation that is going to change in favor of fiat currencies, that's for sure. Politically, it would be impossible for any government, in the G7 anyway, to reverse the decline in their currencies. They've been educated, I think, by the macroeconomic establishment, use a weak currency to benefit the economy, to stimulate the economy. They're not going to change for that, particularly when freed from the constraints of a gold standard, that they can issue as much debt as they want. And that's what they're doing. So you've got an accumulation of debt, and that's where the crisis now is. What's going to happen to the value of that debt? The other side of that debt is the value of the currency. Debt equals credit. Credit is the currency, and also loans underneath that, which businesses have taken out, individuals have taken out, stock market speculators have taken out. It's the value of that credit which you've got to question. You've got to keep your eye on that. So, short answer to your question is that stackers should maybe say, well, thank goodness we've got a sort of situation which means I can, save a bit more out of useless credit and put it into real money. Let's hope this pause goes on for some time, and then I can really sort myself out. I think that's the way to look at it, not to be spooked by what's going on, if you like, in up 5%, down 5%, whatever.
What are your thoughts? Why does Alasdair Macleod believe silver is undervalued and likely to rise further despite current market shortages? What key advice does Alasdair give to long-term gold and silver holders about handling short-term market volatility? If you appreciate this video, please hit the bell button for timely updates, subscribe to the channel, and like the video. Also, leave a remark with your ideas. We value your presence and thank you for your support.